Well, I think what the market is saying is they do expect inflation to go up more over the next 5 years than the 5 years following that, right? Because the 5 year break even, we're seeing the pace of moving higher much quicker in that than we are in the 10-year break even number. And, about 2 months ago, the market was saying that they thought inflation was going to go higher. We saw that US 10-year Treasury go up to about that 175 level, but it's come back quite a bit. And I think it's because the Federal Reserve has been so adamant that they are not going to raise rates anytime soon, that it's a long path before they start to have those discussions on taking away accommodation. And I think the market started to believe them. The question is going to be over the next few months as we see spikes in inflation, because we know they're going to be there for some temporary factors. Is that going to develop into more permanent inflation, or is it going to be temporary? And we just don't know the answer to that yet. That's going to be what drives the Fed.
That is going to be what drives the Fed, but I think the market has its concerns right here, right now, as we step into the summer months where there's going to be all that talk about tapering. But coming on to the main issue for the markets yesterday, which was techs, do you think it's time to step back on the tech rally, or because growth is so strong that you can ignore the other headwinds in taxes and potential rate hikes?
Tanvir, we do like that secular growth component in the market. So you can play tech without having to necessarily be in any of those really big high flying names that we've seen really come down. You could be in a name like an Nvidia or a name like Adobe. So you're not in what they call those FANG names. But look, if you don't have these names in your portfolio, this could be getting close to the bottom for some of the pullback that we're seeing in these names. This could be an opportunity for someone to add in some Apple or some Microsoft, but those names are considered longer duration names. So as we see yields start to creep higher, and they are creeping, Tanvir, right? It's very small movements that we're seeing right now, up to about a 159 on the last trading session in the US. Then we're seeing tech pull back. And I think it's just a little bit of a breather as people are moving more towards the reopening trades and trying to take advantage of some of the short-term gains there.